There was a rumor going around last fall that $FSR was in talks with Apple to partner on an electric car. Henrik was fueling this rumor himself with memes that seemed to wink at the idea. Fisker is still early stage enough where Tim Apple could come in and apply the Apple style to the Fisker design, which TBH are already sexy. Rumor yesterday was that Tim Apple influenced Foxconn to take the manufacturing deal with Fisker, in an attempt to bring $FSR closer to the Apple ecosystem. Vegan interior. Solar sunroof. Be still your sustainable heart. Meet the ocean, not just an EV, but a tech romance between machine and planet, with vegan interior and upcycled materials like recycled fishing nets and fibers derived from worn-out t-shirts. Heck, even the sunroof is solar. Yeah, we went there. Fisker and Foxconn set to collaborate on electric vehicle project. Highlights of the proposed collaboration, codenamed Project Pear Personal Electric Automotive Revolution. The creation of Project Pear with a Foxconn brings together two like-minded and complementary companies, each focused on creating new value in a traditional industry. We will create a vehicle that crosses social borders, while offering a combination of advanced technology, desirable design, innovation and value for money, whilst delivering on our commitment to create the world's most sustainable vehicles. Not unlike when Isaac Newton realized the powers of gravity, the inspiration for this project has come from some unconventional sources, added Mr. Fisker. The design sketch hints at the direction we are taking. However, with the level of innovation planned for this vehicle, I intend to keep the final design a surprise until the last possible moment.
Finally, regarding Q4, most of the ocean program-related activity, including scoping product attributes, identifying key suppliers, and creating an execution plan for long lead components, our spending was mostly headcount-related. If we review our reverse merger announcement in July, we expected a significant amount of supplier-related R&D and capital spending to occur in Q4. However, given a much more informed forecast for the program working along with Magna and our suppliers, that spending will now occur in early 2021. Now turning to our outlook. As noted in the press release, we expect overall cash spending to be $450 million at the midpoint of the range, which would consist of an R&D expense of approximately $195 million, SG&A of approximately $30 million, and CapEx of approximately $225 million. We expect the cadence of spending to be roughly steady across all 4 quarters in 2021. Beginning in Q1, our R&D expense will increase meaningfully as we continue to build our internal organization, kick off long lead suppliers, and ramp up payments to third-party service providers. The rapid ramp-up of spending in Q1 should give you plenty confidence that the concept and supplier evaluation work we did in Q4 was successful and the program is now in full execution mode. Finally, we have excellent visibility on ocean program spending. It is based primarily on supplier nomination agreements and a well-defined timeline and a highly diligent cost schedule on vehicle integration and production preparations developed in collaboration with our partner Magna Steyr. While we cannot guarantee everything will go to plan, we are highly confident that the many unknowns and risks that all startups face are more limited by Fisker due to our unique business model. This cost and timing visibility sets us far apart from other new EV startups, and we expect it will lead to growing investor confidence over time. Finally, we have taken sophisticated program cadence methodologies that established OEMs follow and combined it with rapid decision-making at each program gateway to reduce cost and time to SOP. This helps us check our program timing and budgets at all key gateways of the program. As both R&D and production tooling kickoff is key focus in 2021, I would like to provide some additional color on our 2021 spend. In 2021, spend is driven by 3 main categories. Number 1, our engineering headcount. Number 2, engineering design and development payments for various components and services provided by our suppliers. Number 3, cost to build mules and prototype vehicles for validation purposes. CapEx consists of tooling for unique parts at supplier facilities and for unique tooling and equipment at Magna Steyr manufacturing facilities to produce our Fisker vehicles. Our guidance includes our choice to spend more than originally planned for R&D on specific technologies to make our product more exciting and class-leading, as Hendrik and Burkhard discussed earlier. Importantly, we do not expect the incremental spend will impact program timing or the price and margin structure of any trim levels of the Ocean. However, we believe the better-than-expected performance across several areas enable Ocean to stand out from our competitive landscape, supports strong demand, strong mix, and more importantly, we are equipping our vehicles with the right hardware that enable monetizing software-enabled revenues generated at the point of sale and beyond. Overall, I am extremely proud of the entire Fisker team for all the accomplishments over the past 6 months and the plans we've established to execute a fantastic, profitable product on time and on budget. We're now happy to take your questions.
As a reminder,
Thanks, David, if you could assemble the queue, please.
Certainly. As a reminder, to ask a question, you will need to press *1 on your telephone. To withdraw your question, press the pound or hash key. Please stand by while we compile the Q&A roster. Your first question comes from the line of Mark Delaney with Goldman Sachs. Your line is open.
Good afternoon, and thanks very much for taking the questions. I was hoping to start by asking about the new announcement with Foxconn. I believe Fisker had been targeting 200 to 250,000 deliveries by mid-decade, with the majority of that coming from the Ocean SUV. But in the announcement from yesterday, you talk about the potential for the Foxconn relationship alone to be 250,000 units, although I don't think there was a time frame specified for getting there. So can you help us understand to what extent the MOU with Foxconn may change your 2025 delivery target?
Yeah, this is Henrik here. Thanks for the question. I think it'll have a positive impact on our projections. This is a program that really has come to life here, a little, kind of alongside our original projections, and I'm really, really excited about it. And if all goes well, which I hope it will, we actually could see us surpassing our original goal of 250,000 by 2025.
That's helpful, and maybe hoping to better understand why Fisker is choosing to collaborate with Hon Hai for the future platform. You mentioned there's potential other options. I understand Hon Hai is the biggest iPhone assembler in the world, and they've done a lot in automotive components, and the company is expanding into other automotive partnerships. But I don't believe Hon Hai has a lot of experience doing full vehicle assembly. So maybe you can talk a bit more about what led to this relationship, and some of the things that excite you about working specifically with Hon Hai. And then are there any drawbacks of starting to work with multiple manufacturing partners as opposed to potentially working more exclusively with Magna and perhaps benefiting from some economies of scale by concentrating your manufacturing relationship? Thank you.
Thanks. Well, first of all, as we have always stated, our business model was always about having multiple partners. I think that allows you to go into different segments, have different type of innovations happening with different partners. Magna's been a great partner and will continue to be a great partner. We have a lot of plans with Magna that is specifically around the FM29 platform. When it comes to Foxconn, that's quite a unique deal because Foxconn is also investing into this vehicle, so we're really co-developing this vehicle. That's the number one. Number two, this is not another electric vehicle. This is reinventing the form of mobility for the future. And I think, Foxconn was really set on finding what they said is almost like, the next Apple of cars. What is that going to be? How do we create this sort of momentum where we think completely different about the automobile? Today, if you think about the automotive industry, they've boxed themselves into segmentation. So when a new car comes out, it's clearly stated it fits in this segment. And if I'm an accountant or a designer earning this salary, then I should be driving that car. And if I'm somebody else, I might choose a different car because that's not in this segment. And what we want to do is we want to create a vehicle which have nothing to do with these segments. It should be able to be bought by anybody because it is the perfect choice of mobility, specifically in urban areas and as a commuter vehicle. And that's quite a big task. What's interesting here about Foxconn in this particular area is that if we want to create a premium vehicle and we want to have a lot of innovation in it, we have to take cost out somewhere. And I think that's probably one of Foxconn's strengths as being, I believe, the largest manufacturer in the world. They got an incredible large supply chain. They believe that they have the ability to take a lot of cost out of an automotive supply chain, having looked at it and investigated it, and that was very attractive to us. Also, coming from a clean sheet of paper with really no heritage, I think Foxconn might be one of the few companies in the world that have not made a car who actually can come up with new ideas of how to make a car in a different way. And I think that's the sort of exciting thing about this project. And because we have several projects and because we are talking to several different companies, it's not like we are taking a risk with just one company doing one experiment. However, I feel with this particular vehicle being somewhat of an experiment, to be quite frank, it's a huge challenge to try and do what we're doing, but I couldn't imagine a better partner than Foxconn to do it because they have been able to take these experiences and experiments in the past. I mean, that's essentially what made them famous, that they jumped in and did the iPhone with Apple. So who better to be our partner in a project like that?
Yeah, it's very helpful. Thanks so much for taking the questions, and congratulations on having your first earnings report.
Thanks, Mark. Your next question comes from the line of Jeff Osborne with Cowen and Company. Your line is open.
Yeah, great. Congratulations for getting the first call done. Couple questions on my end. I was wondering if you can touch on the percentage of the ocean bill of materials that is nailed down now to give you the confidence in the margins that you talked about. You highlighted a few key components, but just is there a magnitude that you can give us for the full vehicle cost?
Thanks, Jeff. This is Geeta. I'll take that question. Jeff, we've organized the program in very sophisticated gateways. Our first gateway last year was what we call the product specification gateway, where we fundamentally identify specifications in the vehicle. Our next gateway, which is upcoming in March, is what we call target assessment. At that point in time, we have nominated all our major suppliers, especially with long lead tooling, and this gives us a very high confidence in terms of what our BOM would look like. At this point in time onwards, we clearly decide what features we think provide great content to the customers, or features we think that we may not want at this point in time, but may introduce later in the life cycle of the product. So we are very confident that we have achieved the BOM targets we wanted to achieve. In fact, I would say that we have more content in the vehicle than we had originally planned for in July.
Got it. That's great to hear. And then I may have didn't hear you correctly, but on the Experience Center, you highlighted introducing the vehicle in November at the LA Auto Show. I think originally you were hoping to have an LA Experience Center where people could see and touch the prototype in May. Is that still on schedule? Given COVID, I wasn't sure if that's delayed.
Due to COVID, it would make no sense to open an Experience Center right now, so because nobody would be really able to go there. So we decided there was no point in taking that extra cash outlay at this point in time. However, we have several locations that we're in the middle of negotiating, and whether we launch our vehicle at an Experience Center or another event, we haven't decided yet. But like I mentioned, due to COVID, I expect that the launch would be sometime maybe before November, hopefully, at least end of this year. And again, we are a little bit in the hands of COVID here. I don't see the point of doing a virtual launch because we have already shown, our vehicle in many different online media. And so I really want to show this vehicle in reality, having people drive it. That's the whole idea. So we'll find the right moment later this year to do it.
Got it. That's all I had. Thank you.
Your next question comes from the line of Itay Michaeli with Citi. Your line is open.
Great. Hi, everybody. Congrats on the first earnings call. Just wanted to talk kind of strategically as we think about your growth over the next few years and the revenue opportunities beyond the sale of the vehicle, and maybe specifically is hoping to get an update on your latest thoughts on like the flex lease model. I think that you mentioned some software opportunities that you're pursuing as well as any potential options for your customers to share their vehicles through peer-to-peer and other constructs like that. Just love to get a sense of latest thoughts sort of in terms of the larger opportunity beyond the vehicle sale itself.
Yeah, so maybe I'll just take the beginning of this question and then hand it over to our CFO. So the whole idea about our flexible lease is that, we own the asset and we lease this vehicle out over probably from the beginning to its end of its life, and that could be somewhere between 12 to 15 years. And you could see, let's say, maybe 8 to 10 people getting into this vehicle over those 12 to 15 years. And if you imagine that the first person leases this vehicle, and as they are enjoying this vehicle, they're deciding to purchase some feature over there for $1,000 and enjoying that feature. They then hand this vehicle back, let's say after 2 years. We now lease it out to another person, but before we send this out for another lease for a slightly lower price, we reset the vehicle to zero, if you want, which means If this person, the second person, wants to lease this vehicle, then they're again paying for that feature that we have already developed. And that shows you the potential of selling a feature multiple times over the life of the vehicle. Of course, also potentially upgrading this feature to give it even more value, but it shows you the mobility revenue that is possible when we own this fleet and we operate the vehicle. And we also think that our vehicles after 4 to 5 years will be way more attractive as a used vehicle in this lease form versus any other competitor, because our vehicle is going to be maintained by us, the OEM, and it'll be under full warranty because we maintain it. And that, I think, is really going to be a unique competitive advantage. I'll hand it over to Geeta to talk a little bit more about the revenue opportunities.
Yeah, the additional revenue opportunities, as I mentioned earlier, of course, is emission credits, which are clearly assets that we would generate. We are looking at even potentially pre-selling some of these emission credits, and I think some other companies have shown that can be a great potential to generate revenue. And as I also mentioned, that there are opportunities for us to share the FM29 platform, so that's another potential source of revenue. Another area, since we are direct to customer and we have our own app where we engage with our customers on a regular basis, we are exploring whether we should look at the business of captive insurance with shared risk with various underwriters.
Great, that's all very, very helpful. If I could think of one last one, just I think the press release mentioned some ongoing discussions for fleet reservations. Maybe, I don't know if you could share an update on, maybe the size or timing around what we might expect around that kind of growth in fleets. I think it's particularly in Europe.
Yeah, we see this as an incredible promising market, specifically in Europe, because in Europe it's more normal than even large corporations actually are offering their employees a lease vehicle as part of retaining or attracting employees. And we have just added a specific salesperson for fleet sales in Europe, started a few weeks ago. So that's something that we're going to go aggressive into, and we are in discussions with several groups over there, and I have high hopes for this because our vehicle has the perfect size in Europe. It's obviously built in Europe, so I think this could be a very attractive avenue for growing sales for us.
Great, that's all very helpful. Thank you.
Your next question comes from the line of Adam Jonas with Morgan Stanley. Your line is open.
Thanks. Evening, everybody. Henrik, apples are nice, but there's just nothing quite like a fresh, juicy pear, right? I have a question on engineering and capital resources. You're running two major projects. Well, again, let's assume the MOU moves forward, okay? And it seems like that process is moving fairly aggressively, as is your model to move fast. But you'd be running two major projects, by the middle of the year or later this year, with two separate manufacturing partners in two different regions at scale. It's an amazing opportunity to take your technology and business model to scale to jump on competitors while managing the risk. But I'm wondering if your current capital base is set up to run these two programs simultaneously, or whether there may be a need or opportunity to bring in more capital to ensure your financial strength as a partner during this important time of execution. And can you remind us how you think about minimum cash levels as well, Geeta, and anything else you might give us? Are you able to give us right now in terms of if the MOU moves forward, how your projections of cash consumption by order of magnitude could change this year? I realize I'm sorry there's a few questions in there, but I think you get the gist, and I think they're important.
Yeah, thanks, Adam. Appreciate it. Let me just start by saying that we actually already have started this program, and the good news is that I'm pretty low paid in the company, and I do both these jobs, so that's a good start. And so that's not a big influence right now as we're in the design phase. But you're absolutely right. Eventually, we're going to have to spend some money on this project. One of the unique things I just want to highlight in this program is that Foxconn is committed to invest in this program, and that's something we're going to be going into details over as we move forward. But the program is on full speed. We're extremely excited about it, and a personal electric automotive revolution is something that I think is needed and really could change the market dynamic, specifically if you talk about more mass market or higher volume in the right price segment. And this vehicle will be priced well below the Ocean. And I think that's where the real opportunity is. But I'm going to hand it over to Geeta to go more in details around your financial questions.
Yeah, thanks, Adam. Adam, first of all, I want to confirm that I'm a fairly risk-averse CFO. Whilst we have a CEO who looks at very exciting products, I am a risk-averse CEO looking at a balance sheet and investments that give us the right ROI. So first of all, we have no debt. We ended the year with over $1 billion. We have a clean balance sheet. So you're absolutely right. How would you look at resources for two programs? First of all, we are looking at how we maximize existing resources in both the companies. Both the companies have existing IP, they have existing capabilities, and that's what the next few months will be spent. At the end of these next few months, we will clearly identify what investments both company needs to make. Now, let's talk a little bit about our existing balance sheet. So today, we will, in this year, we will be investing hundreds of millions of dollars in production tooling and equipment that we will own. Our discussions indicate that these can be potentially financed at low cost in a variety of ways if we want to do that, specifically for an ESG forward company. Then again, I'd mentioned about emission credits that can be monetized. Now, both the companies are committed to investing, so it's not just Fisker investing. And as we all would agree, capital markets have decided that electrification is the future of automotive. And once we achieve some of our key R&D and production milestones, if we see both a need and an opportunity to further bolster our already strong balance sheet, we will do that in an efficient way.
Okay, thanks for that, Geeta. And I just have one follow-up on batteries. I've been accused of overreacting on this, but I'm kind of a nervous guy. I'm thinking that there could be a battery shortage, a very serious supply-demand imbalance as we see EV demand and then the number of EV entrants promising such large volumes. Now, you got to jump on this, and I would imagine that Magna and Foxconn are two partners that if they tell someone we need the batteries, that's something you want to try to do. But am I crazy? Should from your lens, Geeta or Henrik, you think they're battery shortage? Where would you rate battery shortage risk on a scale of 1 to 10? And how can you assure us here that that's not a gating factor for you? I'm talking cell supply specifically, as you to make good on your SOP and ramp efficaciously. Thank you.
Yeah, thanks, Adam. So, we have already nominated our cell supplier, and it is one of the largest cell suppliers in the world that we have worked quite a long time with. And I, at this point, do not really see an issue for us, for Fisker, and the reason is that this supplier is very well known for both Magna and Foxconn, as you said. So it's not like either of the three companies have to go in, on a cold call there. So for Fisker, I don't see it as an issue. Now, can there be issues for other companies entering this space? Possibly. I also think it depends on how fast, of course, the EV growth is on each continent. Now, we have seen that, for instance, in Europe, there is a lot of new factories being set up, as well as in Asia. I actually think the one that's lagging behind right now is the U.S., and that's just talking generally about battery cell and battery pack production. So we are already in discussions with our nominated cell supplier about setting up battery cell and battery pack manufacturing, both in potential Europe and the U.S. So it's definitely something where you got to have a tight-knit relationship with long-term in mind to make sure you have what you need. Geeta, you have a few things?
Yeah, Adam, I just want to add, you're absolutely right why you're skeptic, because whilst we've been talking to multiple battery companies, they've been burnt by many OEMs who haven't delivered on the volumes that they requested. And as a result, what we found is all the battery companies are very, very selective in who they want to work with. And when you want to have a capacity lockdown, you have to have relationships. You also have to have a desirable product that the battery companies will want their batteries to be in, because they've heard this story before that somebody wants to make an EV, but fundamentally nobody wants to buy. So it's not just the function of locking capacity, but it's exciting battery suppliers, bringing them with you on the journey, making them believe that this will be a win-win. And of course, there's only one company that's been able to do that, and we are very confident will be the second one.
Thanks so much. Thank you, Adam. David, I'm gonna jump in here for a second. Guys, retail investors are important to us. They make up a big percentage of our shareholder base, and I solicited some questions. We'll try to do them rapid fire so we can get back to the analyst queue, but I'm just going to ask a few. I'm going to start with one. We heard you talking on social media about an IT center you're establishing in India. Can you give us a little bit more detail on that?
Yeah, sure, Burkhard. So it's actually not an IT center. It's a software development center that we intend to grow.